The U.S. Federal Reserve raised its key interest rate, but also left open the possibility of keeping rates the same at this next meeting. This has led to concerns that the Fed may be repeating mistakes from the 1970s when inflation spiraled out of control. Gary Richardson, a Federal Reserve historian, warns that pausing rate hikes repeatedly could cause longer term problems for investors. However, we are optimistic that borrowing costs may have peaked. Despite signs of stress in the banking sector, the U.S. economy continues to produce mixed signals. For example, data released last week showed that the U.S. employers added 253 jobs in April, a surprising increase at a time when many indicators have been pointing to a slowdown in hiring. This has increased the pressure on Fed to keep hiking, despite hopes to the contrary on Wall Street. Meanwhile, senior U.S. Treasury officials are warning of the dire consequences if an agreement is not reached soon to raise the country's debt ceiling. President Joe Biden will hold a meeting with congressional leaders, including Republican House Speaker Kevin McCarthy, on Tuesday. Unless the debt ceiling is increased, the U.S. will not be able to pay its bills by early June, which could have a major impact on the economy. Now, finally, at the KBW Regional Banking Index, the KBW Regional Banking Index recently plunged 8%. Its worst showing since the failure of the Silicon Valley Bank in March. Now, however, shares of PacWest, Zions, and Comerica are up in pre-market trading on Monday, suggests that the crisis of confidence in the sector may be ending. Nonetheless, given the ongoing volatility, it's too often to say for sure. Now, if you're in need of an experienced commercial real estate broker, I can be reached at 281 222 0433. Thanks for your time and have a good day.